Good evening, ladies. If you can see me, if you can hear me, could you please put a message in the chat, just so that I know that everybody is on the call. Yes, thank you for the reaction, thank you. So you're welcome to this week's digital workshop brought to you by GAIA Africa's Executive Academy. This is that avenue where GAIA Africa brings you the best investment opportunities, the most updated news around the world, and all the necessary information that we believe that you need to know as C-suite level executives. This evening, we have on the call as our guest speaker, Ayo. Are you there? Yes. So this evening, we have Ayodele Idowu, who is the managing partner for Trade Pointe Property Consultant Limited. And he'll be taking us through a few points on constructing a strategic asset allocation, risk versus reward, and what makes Terra developers unique. In the course of his presentation, he'll let us know all about Terra developers and the investment opportunities that they have in Lagos and Abuja. My name is Shalom Alugwe. Thank you, Madam YK, for that prompt. And I will be coordinating the digital workshop for today. Before we go on, before I bring Ayo up to the E stage, I would like to project his profile and read it out to everyone. All right. Ayodele Idowu. Ayo is the founder and managing partner of Trade Pointe, a company that focuses on real estate, technology, and consulting. With over 18 years of experience in the financial service industry, Ayodele has built a reputation as a dynamic leader and strategist with a track record of success in business and market strategy development, project management, and financial planning. As a certified wealth management professional and business analyst, Ayo brings a unique blend of expertise. His experience spans across securities brokerage, asset management, specialized funds, and real estate, making him a well-rounded leader with an eye for innovation and excellence. Prior to setting up Trade Pointe, Ayodele worked in different subsidiaries within the ARM group, where he played a pivotal role in the strategy formulation and execution of key performance indicators across different businesses. If your electronic hands are not too busy, please let's make Ayo comfortable. Thank you, Ayo, for joining us today. You have the floor.
Thank you. All right, thank you, Sharon, and good evening, everyone. Can you hear me? Loud, just to be sure.
Yes, we can.
Awesome. So good evening, everyone, once again, and thank you for the opportunity to speak to you today. I'll be speaking on the topic, investing in an uncertain world, real estate as a store of value. I have on the call with me my colleague Dolapo Orelaja, and we will be taking the presentation. So thank you again, once again, and I'll jump right into it. All right. Okay. Just a second, I need to stop share. The slides aren't moving. Just give me a second, please. All right, thanks again, and sorry for that. So the table of content is as thus. I'll be speaking, I'll take you through the introduction, the world we live in, and what we term as going back to the basics, which is basically saying that we need to go back to the fundamentals, which is the financial planning approach. I'll talk about life in retirement, and then we'll speak about what we've tagged "Buy the rumors, sell the news," a case for real estate investments. And then we'll take a recap of the key highlights and take question and answers afterwards. So very quickly, I'll touch on the macros, again, primarily because we're all business leaders, and it's important that we keep an eye on what's going on in the world today. And more importantly is the fact that we live in a world that is filled with uncertainty. From the last IMF report we saw, there's a global slowdown. IMF is forecasting that the growth for this year will be 2.8, coming down from 3.4 from last year. The major where places we see slowdown is the developed markets. So the US is going to slow down. UK is being projected to grow at not negative 0.8%, and Eurozone is also going to decline. Where the bright spots are is China, India projected to grow at 5.4% this year, and Sub-Saharan Africa. So again, this is fueled by heightened inflation across the globe, and of course, fragilities within the financial service sector, and of course, high cost of borrowing. So that would impact this year. Another key thing to look at is really the war in Russia, the Russia war in Ukraine, and that's because of the impact it has on the energy market. Another key area that one must also pay an eye for is geopolitical tensions that's also brewing up in Sudan. So one needs to keep an eye on what's going on there, and how it impacts the world of business and the world we live in today. Also, there's a lot of talk on climate change, shift from fossil energy into renewable energy. For a country like Nigeria that makes most of our revenues from oil, it's important that the strategies that we put in place going forward, and now how that would impact the country is critical, and we must keep an eye on that. And of course, shifting alliances, US-China relations, and the rest of the world. Just to put that in perspective, proper context, over the last decade or so, you'll notice that there's been a lot of close ties between a lot of countries in Africa and China, particularly for infrastructure development and all of that. And on the Western side of things, the West nations have been at the back burner. But that narrative is beginning to change for obvious reasons. Africa, as you know, has the highest young population, which means that Africa will create the market for the future and even the workforce for the future. So we see a lot of that narrative changing with the West, particularly America, now coming at the forefront and engaging African countries on how they intend to collaborate going forward. So we must keep an eye on that space and see how that impacts our world. And then on the global front, of course, the big thing today is the fifth industrial revolution, which has come upon us. The more collaboration or the increased collaboration between humans and machine, and how that will transform the world we live in. So conversations around AI, machine learning, robotics, and how that is transforming the world of business is key. And we've already seen that play out in the last couple of months with a lot of the big tech companies right-sizing. I think I must also say that it's commendable to give kudos to the GAIA Group for the alliance with Dubai Tourism. I know that a lot of what it's doing with technology, etc., would have been shown to you, and you can just imagine how rapidly the world is evolving with technology transforming. Now, if we cap that all up with what is going on in Nigeria, heightened inflation, from the last time we checked, inflation at 2.04, but reality is that, and even from the reports I see from some of the reputable economists out there, when they reprinted that basket that computes inflation, is somewhere around 60%, and I quite agree with them because cost of foods and services has really gone up. So heightened inflation, FX is a big topic because every time you speak to clients, and in most conversations, the conversation is always around what do I do, what is the direction of FX and all of that. Also, the continuous security challenges we have is big because that would stop a lot of foreign direct investments coming in. So by the time you wrap all this up, for us, we think that going into the future, going into 2023 and beyond, I think Nigeria in particular is a story of two halves. The first half, which has meant that nothing has really transpired beyond the fact that there's been more accretion to our debt profile. I think today our debt profile is somewhere around between 77 and 8 trillion naira. And then the second half, which is when the new administration will come in and the things that they do going forward and how that would impact the world we live in. We think that the priority areas are areas that are critical and must be addressed immediately is one, national security. I'm not sure we've ever been this disunited as a nation. And it's important that that is addressed because, as they say, there's unity in our diversity. There's growth in our diversity, and we have to leverage off that. The second thing is that the economy. The economy, as you know, is critical. I mean, we haven't seen the last numbers from the Ministry of Labor and Employment, but we can already tell that we have a very high unemployment rate. Oil and gas is a critical area. Obviously, the conversations around oil theft and Nigeria not being able to meet the budget for this year and what needs to be done is critical, and how that is addressed will mean how we look at things going forward. Agriculture is also critical because for us, there's no telling that we have a huge land bank in this country, arable land that we can't feed ourselves as a nation. So it's something that must be looked into very quickly. And this portends opportunity. Another area that I think I should mention is entertainment. I mean, one of the slogans you hear today is Afro Beach to the world. And we have the likes of Burna Boy, Davido, Wizkid, most recently Tiwa Savage doing us proud in the international place. But a lot of the world created is outside this country. So the government has to do a lot more to ensure that the entertainment, in fact, creatives as a whole, become much more productive and contribute to our GDP. So those are the key areas that we think that the government's, the incoming administration has to look at and work on very quickly. Now, the reason why I'm taking my time to just sort of highlight these areas is that as business leaders, two key things. One, the sort of initiatives or CSR, I would say, that we support to drive some of those things. And the reality is that there's this attendant effect. If things are not done down the line, it becomes a menace because there's no point having a huge population like we do in Nigeria that is unskilled. It has a negative impact. So having said all of this and having painted this very gloomy picture, the reality is, what does the future hold? Because in all of this, we must remain hopeful. And that takes me to the next slide. And we've tagged this slide in times like this. What do? We go back to the basics, the essence of having a comprehensive financial plan. But before I go into this, I'll share a story very quickly. 2 years ago, a friend and I engaged my cousin who works as a data scientist in one of the big tech companies abroad. And what we asked him to do for us was to primarily help us create a portfolio, a high dividend yield portfolio, which meant that the churn rate of that portfolio would be very minimal. Gave him all the parameters, and he created our portfolio for us with some specific rules and a bit of artificial intelligence encoded in it. And my friend and I also had a portfolio that we managed. And what we tried to do essentially was to look at the performance of both portfolios over a period of time, over a 2-year period. As you would imagine, the first year, the artificial intelligence portfolio outperformed. But second year, and even till this time, emotional intelligence has sort of outperformed the artificial intelligence portfolio. And why is this so? It is so because at the end of the day, as we said earlier, there's so much uncertainty, so much volatility. The reality is that one information can distort the reason or the thinking behind what you've encoded into your model. So you must be up and abreast to ensure that your portfolio is in line and is where information coming, you're very quickly going into make those changes. Now, the reason why I've said this story is very simple. One of the interesting conversations I've had is, why do I need a financial planner at this time when I have all sort of solutions out there to help? Why can't I just buy one of the solutions and use it? And my answer to that is, yes, artificial intelligence is good. Yes, these solutions may help, but over and above, you need to layer it with humans. And what human does for you is, in times like this, where there's very quick volatility or information filtering into the market that will distort the performance of your portfolio, that human is there to assist. Now, coming into this specifically, we've tagged this quadrant, this circle into 4 quadrants. The first quadrant just basically says you need to go back to the basics by coming up with a strategy and reviewing that strategy and having an outlook. So a strategy review. Now, the first and most critical thing really is to articulate mission, vision, and core values, which you've set for yourself. And then the second most important thing is to analyze the current situation, which I consider a very rigorous process. Now, when we have sessions like this, one of the things we find is that people are usually very enthusiastic. But when that rigor comes, where the back and forth of making sure that the nitty-gritty to the minutest detail is captured into your financial plan, I see that enthusiasm going out. So it's a very sort of hectic and tedious process. But it's something that has to be done. And it's not just limited to finances. Beyond your financial situation, there's also the health parts, there's the career or professional parts. You have the same applies to your wards and people within your immediate environment. So it's always important to articulate this end to end and make sure that everything is captured. And when that is done, you then define what you think the future should be. And in defining the future, that basically just speaks to your goals, your objectives, your aspirations of how you would like to live in retirement. Now, the next part of it, which we've tagged planning. After you've completed the first part, you go into your second part, which is planning. First, most important thing is to assess risk. When we talk about risk, things around what's my attitude towards risk is. Am I risk averse? Am I ready to lose any money? I'm happy to have minimal exposure to risk. What sort of investment management products do I have in place? Am I underinsured or overinsured? Am I even properly insured? Do I have a trust in place? If I don't have a trust, do I have a will? Is it up to date? Those things are critical. And then the next thing I'll say is define your change strategy. And then the change strategy simply just speaks to a calendar that articulates the key things that you want to achieve over a period of time. And it's clearly articulated and adhered to, and then you implement. From the planning phase into the next phase, which is execution and monitoring. And for us, we say execution is on an ongoing basis, but monitoring is quite important because, as we've said, we live in a world where things change very rapidly. So the conversation around looking at alternatives vis-a-vis what you've selected and how that will impact your position going forward is critical. And then finally, conduct monthly. We propose to conduct monthly, and as the plan is fully being implemented and things are working smoothly, and then you can then switch to quarterly and then revise, review and revise where necessary. So that's really the financial planning process in a nutshell. Now, one of the things that I find is that as business executives, we normally conduct this in our business world. When we have strategy sessions, budgetary sessions, monthly periodic reviews to meet KPIs, etc. What we're basically doing is that in our business life. But many of us in our personal lives somehow just become too busy and not have this laid out for us. And as we said at the beginning, if you live in a world that is filled with complexity, uncertainty, going back to the basics, going back to the foundation and ensuring that everything is done properly is critical. Now, I know that some of us on this call would have a financial plan in place that is active. I'll say kudos to you, fantastic. And I also know that some of us may have come up with a financial plan, but as things have evolved and as we've gotten busy with our day-to-day operations of the business, running of the business, etc., we sort of left it behind. My advice is it's now is more than ever is important for us to go back and review and make changes when necessary. So that's what we say when it comes to going back to the basics and ensuring that we get ourselves sort of insulated from any shock or any information or anything that impacts our world and our ability to meet our long-term goals and objectives. This next slide just basically speaks to repositioning your investment portfolio. And I'll just tell a quick story as well. 2 years ago, I met a client on a session like this, a digital session like this. Just to describe her profile, she worked in one of the she works in one of the multilateral agencies. She has expertise in private equity with focus on infrastructure. So you can call her an astute investor, very vast, over 30 years experience in the financial service industry. So she's quite vast when it comes to investments, investment products, how to read markets, how instruments work, etc. And I talked to her about financial planning and the importance of it. And she was enthusiastic at first, but as we normally would see, that enthusiasm waned out over time. I think mid last year, something tragic happened. She lost her sister. And that simply meant that a lot of plans that she had, or a lot of assumptions that she had, everything came to a standstill. Our world was almost crumbling. And she immediately reached out and we started to talk about our financial plan. We revisited it, took our goals and objectives, analyzed our current situation, and started to implement the changes. But one thing I found that's very remarkable that I hold on to every day is that once you have a mindset shift and you see the importance in something, you go all out for it. So for someone that wasn't able to get a hold of it a year and a half, within 3 months, we had gone past the planning, we had moved past the implementation stage, and it was more around periodic reviews. And I found that quite telling. But today, this is what our portfolio looks like. This is someone that, when we engaged initially, she said she was an aggressive investor because she had so much knowledge about financial markets. She was more interested in private equity or nothing else. But when we articulated all our goals, our objectives, we highlighted the risk reward and showed her how things can easily be distorted. You know, when things are written down, it becomes more clear, more apparent. And if you look at our portfolio closely today, you will find out that it's a conservative portfolio. 80% of the assets are in less riskier assets, and you have 20% in equity risky assets. And that just tells me that even though we may have an intuition about what we believe our risk profile is, what we believe we want to achieve, without going and doing the basics, going back to the basics and doing the key things that matter, we may not even be able to tell specifically what our goals and objectives are and how we intend to achieve them. So this slide is one that I like to just quickly show. It talks about different asset classes. We call it the risk pyramid. At the base is where you have your cash and near cash instruments. And we typically will say that those sort of instruments is what you use to meet your emergency needs and your short-term needs. Short-terms are typically anything between 0 to 12 months. So things like cash equivalent, money market funds, money market securities, etc. You use it to meet your short-term goals. At the middle of the pyramid is where you have real estate, quoted equities, etc. And those instruments are instruments that you use to meet your medium-term goals. So anything between 2 to 5 years, you use it to meet your medium-term goals. And the summit is where you have more sophisticated, more riskier instruments which potentially can give you higher returns. You use it to meet your long-term goals. So anything from 5 years and above. Now, what I find in our environment is that a lot of people, knowingly or unknowingly, they use instruments within the mid of the pyramid to meet short-term goals. And that's an anomaly because, like we said, things can very quickly change. And if we're going back to the basics, things have to be done fundamentally, even though there may be trading strategies, etc. But the core of the strategy needs to be, the core has to be the strategy while we have short-term, flexibility in taking advantage of whatever opportunity we see in the marketplace. So on the next slide, I like this slide very much, and it just speaks to, the sense of the people that I'm speaking to today. Now, if you look at the graph, it says the stages of retirement. It's Robert Kiyosaki in one of his books that says that there are 3 stages of retirement: active, stable, and of course, secure retirement. But what is very interesting is that I can almost imagine that almost all of us on this webinar will be closer to active retirement, or some of us may even be in active retirement. And if you look at the end of the curve, it says 55 to 85, which means 30 years. 30 years really is perhaps the longest phase of our life. If we take the first 2 phase period where we're in school and when we started to work, and then we look at retirement, which is 30 years plus. Now, with the lifestyle we live, and with the improvement of medical sciences and using AI and automation to sort of get it into medical sciences, the sense is that a lot of us will live more than 85. So basically, our retirement age is going to stretch further than 85, etc. Now, this graph speaks a lot to me because if you look at it closer, the red arrow just basically speaks to our income, and the dotted arrow speaks to our expenses. Now, what that basically tells me is that as we live in retirement, expenses will continue to come in, income will continue to creep down. What we have to do is to look for ways to flatten that gap or even reverse the gap. Beyond all that we have done, if we've done a good job within our financial plan over the years, the reality is that that gap will close. But that leads me to the next point, which is beyond everything that we've done, there's always a case for real estate investments. Real estate is that asset class that is, 1, passive in nature, 2, can give you very good ROI if you add the recurring rental income that comes with appreciation on the property. There's no telling. Now, because it's passive, if we pick right or we invest right within that asset class, what it can do for us is help us close that gap and even reverse it in a passive way over that duration of time. So irrespective of what happens with the other asset classes or the other instruments that we have in our portfolio, real estate just seems to stand out because of the ability to, 1, withhold that risk that inflation brings in, so a hedge against inflation. But in a country like Nigeria, which I even find very interesting, or developing markets, and Nigeria in particular, because of the volatility in our exchange rate, what you typically will find is that when there's a depreciation in Naira, there's an immediate adjustment in value of properties. And we saw that recently with properties moving as high as 40, 50, 60% within a short space of time because of that movement in currency. So real estate just portends to be that instrument that we can use, particularly because it's passive in nature and it can help us further augment our portfolio against any volatility as we move down the line. So this is the next slide, and we say buy the rumor, sell the news, which is a trading strategy that has been on for decades, centuries. And this is basically saying that when you have any premonition about anything that is going to impact an asset class, a stock, a locality, etc., it's always good to do your research and then take positions. And then when everybody's talking about it, you can then sell it, which basically means seeking out to acquire undervalued assets and then selling. Now, let me also add that I believe it's Warren Buffett. Yes, Warren Buffett that says that there are three key things that you must learn when it comes to investing. One, the first and most important thing is that there is no short time or short term in investments. If the plan is to invest for a day, a week, a month, a year, you can as well go longer, 10 years. The second thing is focus on return of capital as against return on capital. I'll take that again. Focus on return of capital as against return on capital. In other words, do not lose money. And then the third thing is never forget point two. And Warren Buffett, whom is one I consider the most successful investor, I'd rather be taking that advice. Now, if we drill down to this slide, there are 5 key things that we've highlighted there, and I think I've spoken about 1 or 2 of them, but I'll just highlight more information there. We say location, 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 and there's no telling when it comes to real estate. Location is everything. If you look at a country like Nigeria, and you look at Nigeria, from the last time we checked about, I think the total number of housing gap deficit we have is about 30.8. If you look at Lagos in particular, that has 1% of the landmass and controls about 25 to 30% of GDP of the country, the deficit is about 3.2 million. Now, what that tells me is that Lagos will continue to be a hub where people will continue to look for good quality, affordable homes. Therefore, if we pick and we select right in Lagos, you can't go wrong. And the same is applicable to most developed markets as well. But speaking to Lagos specifically, there are some pockets of opportunities that we see today. And I would like to share that with you. The first opportunity is a new community brewing off Freedom Way. Some of you may know CIS off Freedom Way if you're quite familiar with the Lekki axis. CIS is, as you drive towards Orange Island, it's off one of those roads closer to Orange Island. And between that district and Ekate, there's a new community growing up there. So we see that as a huge opportunity. And the first time I went to that place about 3 years ago, it was swamped with all sorts of shanties all over it. But today, it's a new community. It's a growing community. Homes are being built there by different real estate companies. And it just looks like that pocket where one can take advantage because the idea is to always look for the valued assets. The second area that we see today, Lagos, is closer to the city center, and is not at the maturity phase of the place I just described, right around CIS, VGC, next to VGC. Now, as you head towards Orange Island on Freedom Way, there's a road to your right that Lagos State government is constructing now called Regional Road that terminates just beside VGC. And of course, for those that go around that axis, that like axis, you know, there's a lot of construction on the bridge coming through. So that pocket, that stretch is where we see a lot of, developers going into now and trying to build, because with the infrastructure coming through, it just means that the access, the thing that used to scare people away from that area, which is traffic, is being addressed. So it becomes even closer to get to Eko and the rest from that area. So there's a huge opportunity there. The other thing that I'll say when it comes to real estate is that every investment is local. So you must understand the local factors within that area. I.e., was the rack rate, occupancy rate, is the tenancy rate great? What of infrastructure, light, power, water? What sort of risk is within that area? So those things matter. Again, remember, it's an investment opportunity for long term. So it's always important for one to take a look at it. And as I mentioned earlier, evaluate the fundamentals, which is take a look at if it is growing, stable, or if it's at a mature phase. And then finally, Are you buying for trading gains, which means that you want to buy now 2, 3, 4 years down the line? You want to sell it, or you want to buy and hold over the long term? Now, what I've described is applicable to real estate all over the world, be it Lagos, Nigeria, the UK, in America, in Canada, where we have presence, we have affiliations. This theme is applicable. And as we've said, if the strategy is for us to ensure that life and retirement, we have the structure in place, we have a portfolio, and we have solutions that can help us address whatever volatility our portfolio is exposed to because of the uncertainty in the world. I think these are things that we must consider critically. Now, this is my second to the last slide, and we say, how can we support you? I think first and foremost, to cap it all up, I'll say that real estate is I'll say Trade Pointe is a real estate asset management organization that focuses on providing end-to-end solution within that real estate asset class. But in doing that, we also look at clients' financial situation. We help them work on their financial plan and come up with a plan that works before we provide solutions around real estate. But secondly, and more importantly, between Dolapo and myself, we have over 35 years wealth management experience. I've provided wealth solutions over 10 years, similar to Dolapo. She worked in international banking, mortgage structuring, creating value propositions for individuals, both in Nigeria and in the US. Again, it's no telling that we have that global reach. Our approach, like I've described, is compelling. Everything we do is tied back to the plan. What is the plan? What is the financial plan? Let's go back and look at the financial plan. How does this decision fit into that plan? Does this still help us achieve our long-term goals? Would we still be able to live in retirement as we've planned? So everything we do is tied back to that financial plan. And we say that we're very client-centric. For us, everything we do is based on the ethos of confidentiality. And that's critical in the role we're playing. And of course, global reach. I think Dolapo will speak about our experience in the global markets. And then last slide, it's a recap of all the things I've said. I mean, I've put a lot on the table, and I'd just like to recap in very quick minutes. I think the first thing we highlighted is that we live in a VUCA world, a world that is filled with volatility, uncertainty, complexity, ambiguity. To cap it all up, there's a lot of uncertainty going on in the global space. But if you look at Nigeria in particular, a lot of the issues we have self-made. And because of that, it's important that more than ever, we need to position ourselves, go back to the basics and look at our financial plan and realign our plans with our long-term financial goals and objectives and ensure that we monitor it periodically. The second thing we said is that strategy is key. We must go back to the basics. Third was us speaking on what an ideal portfolio would look like based on a client's situation. Fourth, we said retirement is the longest period of our financial life, and we must be very meticulous on how we plan on retirement. And I highlighted a graph that shows our income pattern and our expenses in retirement and what we must do in addition to having a financial plan, what we must do with the real estate asset class to close the gap or even reverse the gap. And then finally, we said buy the rumors and sell the rumors and how Trade Pointe can help you. Thank you very much for listening. Dolapo, I guess you want to say one or two things before we go into the session.
Good evening, everyone. Thank you so much for this opportunity. My name is Dolapo Orelaja. Ayo has given a little bit of recap of who I am and my expertise in the fields when it comes to mortgages and real estate. So I would just add a little bit of color to what Ayo has shared. Based on Trade Pointe, what we do as Trade Pointe as advisors to clients, we conduct a lot of research when it comes to real estate, not only locally, but also globally. And as advisors, we have to stay on track and stay updated so that we can advise and give advice to clients on how and where to invest when it comes to real estate. I remember one of Ayo's slides, he said location, 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 right? So location is extremely important. Based on the research we did, in the last few years, we have seen a lot of people migrate to United States, United Kingdom, and Canada. And this has led to that growth in real estate market. We have been able to identify some focus areas in the United States, UK, and Canada, where we'll advise our clients to invest when it comes to real estate. For example, I'll just name a few because we have limited time. In the United States market, one of the focus areas would be the emerging tech hubs like the Seattle, Austin, Denver. These cities have benefited definitely from the thriving tech industry, and they attract a lot of young professionals. You know, when you see young professionals move to Seattle and Austin, it helps drive the demand for real estate properties or real estate investments. We've also seen, if you look at the southern state or southern region like Florida, Texas, or Arizona, they've become that popular destination for property investment due to their favorable tax climate, affordable housing program, and then that growing population. We all agree that, I'm not sure how many people have been to Florida or know Florida, it's that it's very business friendly and it attracts a lot of tourists. And that makes that state or the states very attractive for both residential and also vacation rental properties. Now, another area in the United States that we always advise our clients to invest in would be the college towns. So I'm talking about the Ann Arbor, Madison, the DMVs, the Durhams. Why do we advise this? Of course, these are where prestigious universities are. And with prestigious universities, of course, students go there with a consistent, and this drives the consistent demand for rental properties from students, faculty, members, and also staff. And this provides a very excellent, it's a very smart choice for our clients. And I always advise clients to invest in areas like this because it attracts that rental high yield, excellent returns. Now, if you look at the United Kingdom, in the United Kingdom, it offers that range of cities and regions where you present that exciting opportunities for property investment. So based on our research, you can look at places like Birmingham, Glasgow, Edinburgh, Manchester. These are areas that provide that strong rental demand because they have that ongoing regeneration project. It creates that balance between affordability and also potential returns. As you all know, returns is very important when it comes to real estate investment. And then the long-term appreciation. Now, in the UK, we also have those university towns like the Oxford, the Cambridge, Bristol, and I believe Bath was in one of our research, where we also have the prestigious universities. And as stated in the when we talked about the United States, it's a very smart choice when it comes to real estate investment. It has that consistent demand for student accommodation and offers that potential of high rental yields. So we always advise our clients to invest in that. We have a couple of clients that have done so. You can look at coastal areas like the island of Rye, the Cornwalls, when it comes to UK. Now, let me quickly run to Canada. Regarding Canada, we looked at areas like, I would say, Montreal. Montreal, it has a lower cost of living compared to other regions like the Vancouvers and the Torontos, which have the property prices in Toronto is extremely high. So that's why I'm not even talking about Toronto in this conversation. But Montreal has a very low cost of living, very strong rental market, which is driven by prestigious universities which are located around Montreal. So in Montreal, we have lots of international students that have moved there, international student populations, and they offer affordable property prices, which provides that solid return on investment. So we advise our clients to look at areas like that. And again, not only look at areas, this is what we do at Trade Pointe. When we do our research, we look at locations, we look at, what the risk associated with areas like that. And also we try to see how we can get the best returns for our clients. But those are the three areas to be seen where I believe that clients should invest in when it comes to real estate. Then we can look at Vancouver. Vancouver has a significant international investor, and it also offers rental markets. It has it's very close to Asia, so you see a lot of growing populations in that area. Now, when you look at Calgary and Edmonton, I think it has a lot of oil and gas companies, which creates that new opportunities for investors too. So areas like those areas that I've just mentioned, out of a few, I mean, I've mentioned a few out of many, are areas where we advise our clients to investing, and some have done so, and the yields are amazing. So with this call now, I'll end this conversation here. We are here to support you end to end. Like Ayodele said, we help walk you through from inception till the end. We handhold you if we have to. We help you look at areas that you should focus on, and these are the areas based on the research we've done. With this said, I will say I'm happy to take questions, or we're happy to take questions, if any. Thank you so much for the opportunity, and we're here.
Thank you, Dolapo.
Thank you, Dolapo and Ayo. We have investment club members on the call. So are there any questions from members of the investment club and non-members of the investment club, so GAIA members? But I would like to ask Dolapo, thank you for pointing out these hotspots around the world. Are there any hotspots within the Nigerian context? I would assume specifically in Lagos and in Abuja. Are there any hotspots or emerging hotspots that you'd like to point us to? And secondly, Trade Pointe, or would I say Terra developers, what is the unique offering that you have that would make investing with you an attractive option for us here at GAIA Africa? Because our members are really avid investors locally and internationally. So is there anything that you'd like for us to take home as that one unique offering that Trade Pointe is renowned for that could be convincing enough? Those are my two comments. Yeah.
Okay, thank you so much. So I'll start with the first question. Are there any hotspots in Lagos where we can focus on? I'll say right now, the hotspots in Lagos will be from the Lekki axis all the way down to, I mean, even Lakaway, around Lakaway is developing itself, but I would say from Lekki axis all the way down. And let's not forget the mainland too is also a hotspot. So when you, but the thing about the mainland is it's, the property prices are a bit pricey, but when you're looking to get affordable properties within Lagos, I will advise that you start with the Lekki axis. We've actually had clients invest in properties with Terra Development, where they were able to buy 3-4 properties per client at a very affordable rate. And those properties, the rental income is extremely very impressive. Ayo talked about the CIS location. The CIS all the way to the back of CIS where you have the I think it's this present house. That is the hottest cake right now, because what the developer is doing is basically making sure that he builds affordable properties. And the kind of properties he's doing is basically like a maisonette, which is the American style kind of building where you have the 2-level apartments. And we found out that a lot of our clients were very interested in those, and they really tapped into that investment. I think building A and B are sold out right now, but he is coming up. I mean, he's been developing for years, and he's coming up with more and more interesting properties at affordable rates. The key word is affordable. The second question, you said the unique offering from Trade Pointe. I think Ayo touched a little bit on that. This is what we do. It's our passion. Me personally, I worked with Wells Fargo in the mortgage and real estate unit for a very long time. From there, I moved to Standard Chartered, worked in the mortgage space for a while, and then Access Bank, from there, ARM and all. So Ayodele himself too has done that. His real estate expertise is he's been there for a long time. So this is what we do. We help clients, we manage clients' investment, we help them invest, and we help them end to end. We are not the kind of company that just will help you buy property. We don't buy and sell property. We don't just manage portfolios. We manage our clients, we manage their lifestyle, we manage their wealth. We want to see that we are generating income and generating wealth for their clients, not only their clients, also, their children, do you understand? So I think that's where our expertise come in. We're passionate about what we do, and we want to ensure that we're growing our clients' wealth when it comes to real estate. I'm not sure if Ayo has anything to add to it. I think that's the one unique proposition we have at Trade Pointe.
Thank you. We have a question in the chat. Madam Atijon, she says, as an investment club, as I said, GAIA Africa has a very active investment club. As an investment club, interested in knowing what is the minimum amount you would advise to begin to start building a portfolio with, and at what risk level?
Okay, let me speak to that. I'll say that as an investment club that has different interests and all of that, the watchword, like I always say, is safety. So the risk has to be very low. You have to go for low risk for starters. And as you build out what I'll call your investment policy statement, depending on what the group agrees and what amount of risk level the group believes they can take on, then that will be clearly spelled out in the investment policy statement. So that's just basically saying that you have a Bible that speaks to how you take on risk, the kind of investment you can invest in, etc., etc. Now, to make that a bit easy for you, today we have the Pension Reform Act that has an investment guideline and has multiple type of portfolios within that guideline. So it's a place you can borrow information from and then tweak to fit the ethos or the beliefs or what GAIA Investment Club is seeking to achieve. But I'll say that the first place to start is start with a low risk profile while you build your investment policy statement and you move along. Now, in terms of how much you can start with, the reality is that dependent. As they say, with investments, the idea is to always start small and grow big over time. And if you remember from what I said earlier, that if you want to invest for a day, a week, a year, you can as well wait for 10 years. And what I'll say is just start, because when you don't start, there's an opportunity forgone. And that opportunity forgone in itself is a cost. I hope that addresses the questions.
I believe it does. Thank you. And finally, we have a question or a comment, a question and a comment. And Mrs. Candy Johnson says she's surprised to hear that real estate investment as a midterm investment. She's surprised to hear that real investment, a midterm investment, because it is liquid, and she thought long-term, as there are generally no quick sale options. So she's asking, how can property be quickly liquidated in your experience?
Okay, how can a property be quickly liquidated? So real estate in itself is by nature is illiquid. Real estate is illiquid in nature. It's not, you can't quickly sell it, But what we've seen, there are instances, there's no rule to everything, there are instances. We've made real estate investments. And when we say real estate investment, we're not just referring to just buying a property. It could be co-investing it could be project finance, it could be anything across that spectrum that focuses on the asset class. But real estate in itself as an instrument is liquid in nature and it is long term.
All right.
So I suspect, yeah, I suspect she was referring to the slide where I said mid of the spectrum.
I was, sorry. Yes, I was.
Okay.
Because when I saw that you put it on the second level, I was like, no, that's not possible.
Yeah.
Okay.
Yeah, so it can, yeah, so it can focus, it can be dependent on the type, but real estate, the asset class in itself is a liquid in nature. From my experience, we've seen instances where properties are purchased, not even completed and divested, even at that not completed state. We've handled some of such transactions.
Absolutely. I think a fix and flip, yes, sure. So you're fixing for the purpose of flipping it. Yeah. Okay. Thank you.
Yeah.
Thank you. Madam Ete, you have the floor.
Good evening, Ayodele. Thank you very much for your presentation. I just want to ask the question, and it's around asking, when you say affordable pricing, what does that mean? That's the first one. And then the second one is when you talk about entry points to all these global markets that you've spoken about, remember that we're in Nigeria, so we're looking at entering into those markets for return on investment and off investment. How do we proceed in terms of value? And as an investment club, how would you advise that we proceed? Thank you.
Okay. So I'll start with the second question. I mean, how do you proceed in terms of getting into global markets? So what we've done over the last 2 years or so is build relationships with real estate professionals across different markets. So for instance, we have relationship with different professionals, valuers, developers, brokers, just general key players within that sector. And what you can do is leverage off the relationship we have. And that's why we're here, to say to you that we can join you on that journey to achieve whatever the objective is across the globe. So that's really how I would say that we can proceed. But we can have a conversation after now, and then we can go into a bit more specifics. Then the first question is, when you say affordable, how much is really affordable? The reality is that, as you know, and as we've said, in Nigeria today, prices of real estate aren't cheap. But we have some projects that which one of the developers we work with that ranges from 30 million up until the 60, 70 million. And that's 1 and 2 bedroom maisonette houses. Again, one thing we must recognize is that the way our children will live and the sort of affordable or the sort of good quality homes that they are looking for or they are seeking for and purchasing is quite different from how our parents lived. So nowadays, you typically will find a lot of what I'll call middies, smaller rooms, smaller open floor plan, where you have kitchen, living room, and all of that. The rooms, the bedrooms on the living room, kitchen, open floor plan. So, I mean, we can have conversations, specific conversations. We see properties that ranges from 20 all the way to 50, 60 million. And you must also know that the majority of where, like the areas that I described, that I called places that are hot, the area around CIS, the area around VGC that is growing now, that's the same style a lot of developers are beginning to imbibe. Terra, for one, has a project that we've invested in them in, around CIS, and it got sold out. I'm fully occupied. Like I said, the first time I got to that location, I was shocked. I couldn't even believe anybody would want to stay there, but it's reality that people live there. And it's 5 minutes drive away from Freedom Way. You know, so it's about looking at those opportunities and taking them when you find them. And as we say, by the room also, there's information out there.
In addition to what Ayodele said regarding to a question to how we'll proceed, again, that's why we're here. What we normally do after sessions like this is we give our contact details to participants. We can have a meeting with you tomorrow. We can have a meeting with you whenever you're available. We can look at what your overall goals are, what areas you're looking at, what your budget is, what is affordable to you. And when we say affordable prices, this is based on, we've done our thorough research in that area. We've analyzed what the average property prices are, and we've talked to the developer to kind of reduce it so that we can make this property affordable to clients. That's why I used a lot of affordability when I was presenting globally. So this is based on our research. I hope that adds to what Ayodele has said.
Thank you.
Thank you.
Thank you. So we'll take 2 more questions and comments. We have V Show.
Yeah, hi. Thank you very much for the presentation. One of the, your presentation made reference to a lot of rental income in your financial plan. But one thing you failed to touch on was a very high default rate in rental collections in Lagos and beyond, even in choice locations. So I think maybe you can, I don't know what has been your experience, but in the community with my friends, it's really high and has discouraged a lot of investment in real estate today. In addition, you talked about a real estate adjusting to for the dollar devaluation. I mean, if I look at some of my investments, so excuse the background, I'm in a public place. If you look at some of the investments I made, when the dollar was, it doesn't really, if I'd left it in dollar and trade, that would be better. So I'd just like you to address those 2 points.
All right. Thanks for the question. So number one, it is true that property prices are adjusted immediately. There's a devaluation in the currency, and that's primarily because a lot of the inputs, iron rods, even cement, etc., is pegged to the dollar. But it doesn't in any way say that it will totally sort of negate the fact that there's a devaluation, but it helps. So that's how I would like you to look at it. It helps. The first question again, I think I missed that.
I'm talking about the high default rate in rental, in collecting rent is very high. It's notoriously high. Even amongst people, they pay for a few years and they stop. So, when making presentations around real estate, nobody ever addresses that naughty issue. So I just like you to speak to it.
I agree. And you're right. Default rate, rental payment default is high. As you'd imagine, in a country where we say there's a high unemployment rate, you can almost imagine that default rate will be very high. So that's not surprising. But what you can do, or what we typically would do, is just at the point of selecting your tenant, what you can do is do your due diligence. Risk in every investment is always the risk side of it. But you can only sort of manage that risk by doing a proper due diligence. And if you know the things that are important, you sort of check those things and make sure that the tenant has those qualities before you rent out the place. But you're right, default is high. It can only be managed by having a proper due diligence. A proper due diligence on the mobile.
Yeah, even with a proper diligence, they pay for a few years and they stop. It's very bad, and I really would like to highlight that. Yeah,
I agree with you. Again, the policies in Nigeria, quote unquote supports the tenant more than the landlord. I agree with you, but I agree with you 100%. But what you can do is try as much as possible to manage that risk. And if one, like I said, is not ready to sort of deal with that sort of headache, there are other areas of real estate that one can invest in. It could be project financing, it could be co-investing. So the risk is really on the developer, not on you. So there are ways around it. And that's why, having those one-on-one conversations, having a one-on-one conversation, so that we can actually drill down to the nitty-gritty and look for a solution that would work. So that's what I would propose.
Okay, sorry, Ayodele, if I could just help you a bit with both of them. Bishop, the experience is really bad, but I also think that in terms of knowledge around how to deal with errant tenants, I think that a lot of tenants take advantage of the fact that there is this 6-month period and all what have you. So when you draft your legal document, right, you put something in advance. So you give the date, you do an in-between that gives the client, the tenant, a bit of the timing. So for instance, I know some people put like 3 months. So you know what your rent is 3 months before. And if you're no longer interested, right, at that point, you should say you are not interested. So you leave off the 3 months off your rent, and then the person has a 3-month period within which to look for another place or something. So that's some way you can deal with it. The erring tenant issues. And then I think also the use of an agent. I know they come with their own issues, but what happens is if you follow through with them, especially if they're lawyers, you get more clients who pay because they know that these people know the law rather than having to deal with them one-on-one. Then the second question around real estate as a store of value in comparison to return and all of those things. The simple answer to it is diversification. You need to diversify your investments across asset classes because the total return on those asset classes will help to even out the loss you experience in areas at different downturns. I just hope I was able to help a little. Thank you.
Thank you.
Thanks for that as well. So diversification is always important. And again, just to add to that, naturally, when we go through that financial planning process, you'll find that your portfolio is properly diversified. And yes, there may be decisions for trading within asset classes, but you already have a well-rounded, diversified portfolio. And as it is said, if there's a downturn in one side, the other, they usually inverse relationship between different asset classes.
Thank you. We'll take
thanks for that.
Johnson's comments, and we will end with Madam Adeshola's comment.
Oh, okay. Sorry, can I go ahead?
Yes, please.
Thank you. I missed part of the presentation, so pardon me if this question has already been answered. I wanted to get a sense from the Trade Pointe team. And hello, Dolapo, how are you? It's been quite a while.
Hello, Ms. Adeshola. It's been a minute.
Good to see you. Yeah, I wanted to get a sense of what the real return is on investment for landlords. That is, if a person buys a plot of land in this same area you're describing in Lekki, puts up, maybe 4 flats or whatever, in your own experience, what would their return on investment be? So they spend 300, 400 million, whatever on the project, right? What is the rental income? Because I'm not so sure that rents adjust with inflation in the way in which you've described it. If a person had, say, 60 million naira, right, and I believe that there are flats that go for that amount in certain parts of the Lekki area, maybe further down, but using, or let's say 75 million, using today's exchange rate, right? That's $100,000. And given the outlook for the foreign exchange market, what advice would you give if somebody had 75 million? Would you say they should buy a flat in these areas you've described and collect rent of 2 million, 3 million naira? Or should they convert it to $100,000 and go and buy a student flat in Aberdeen that they know will be rented out? They're earning foreign exchange, they've hedged the currency, and the returns overall, including the depreciation and returns, would it not be more than going to buy a flat where you're collecting rents of 2.5 million, 3 million every year? Thank you.
All right. So again, if we're looking at it on the face of it, we'll say convert to USD, buy abroad. We provide that service. Dolapo spoke extensively about it. But again, people make investment decisions for several reasons. Just recently, we're talking to a client, and the reason why she decided to buy here now is because she wanted to buy property for her son to live in the next 6 months. So the reason is always, it could be different, and it just goes back to the essence of a financial plan. Once we have
the reason I gave was return. Sorry, the reason I put a context to my question. I'm talking about comparative returns, not someone who doesn't, I mean, obviously if she buys it for her son, it's probably cheaper than, maybe renting, or it's an investment, it's a present, it's a gifting.
Yeah.
I'm just talking about in terms of returns. If you are advising, and somebody has 75 million naira, what would you tell them to do?
Yeah, from a return perspective, purely a return play will say, look abroad, convert to USD and buy abroad. And then just speaking to the conversation around, so we weren't saying so much of rent adjusting to inflation, but more property value, more property value. So we see a lot of that. And the point was made when we were speaking to when there was a depreciation in the currency, property prices immediately adjusted. And we saw a lot of people within that period even sell and take that money abroad. So from a return perspective, it's always better to look at buying abroad for obvious reasons.
Thank you.
Yes, ma'am. Yeah.
I would have said something. I mean, I do manage the operations abroad. So if you are looking at investing in Aberdeen, I'm here to help you walk that through. So I didn't want to say it. I wanted Ayodele to respond to that because I manage operations abroad. So I didn't want to be biased, saying we should invest abroad rather than here. But again, like Ayodele said, it's dependent on what the client's ask is. Some prefer to invest here for their personal reasons, like the personal reason Ayodele gave, and some, like we always advise, if they had that 75 million, we'll advise that they should invest in FX currency to get better yields. Thank you, Mr. Deshola.
Okay, so I have I guess it's a comment and a question, perhaps. And so three of us invest in Alaro City. I think about 3 years ago, perhaps now.
Yeah.
And at that time, I mean, I think it was pegged to the dollar at around, I think they used the NAFEX rates or whatever it was, and it was 390 to 1. So I think when you buy land, I guess in a place where there's a lot of development going on, it can make sense, provided you're not planning on building and renting, because honestly, I just don't really think that there's much upside to that, because once you're a landlord, all kinds of things, people are calling you, there's all kinds of things, you just don't want to get involved with that. I think it's better if you're buying land and either flinging it or you're buying to build and dispose of it, you know, quickly. So the only thing though is, you know, as we said earlier, it is illiquid. So if we were trying to sell that piece of land now, which I think we probably have to because there's a deadline for developing it, it's now a question of, you know, finding a buyer. So you can find that you're stuck with this investment, which has definitely increased in value. First of all, based on the Naira dollar exchange alone, you know, before you even talk about what the value is today, how much they're selling it per plot or whatever it is. So there is some upside, but I think you have to decide on, you know, what type of investment. And I certainly would not advise building to rent. No, not here anyway.
Fair enough. That's a fair comment, to be honest. That's a fair comment, to be honest.
Well, I think especially because of the legal system. So if you're buying to rent outside Nigeria, there are fairly strict rules around, you know, tenants paying their rent, etc. So that, you know, is, you know, a lot easier than here, where, you know, you literally have lawyers having to remove the roof of property so that they can get rid of people. No, it's true. They can get rid of people. So you just do not want to get into that kind of, you know, wahala.
Yeah. Honestly, it's a fair comment. It's a fair comment to make. And I quite align with you as well on that.
Thank you very much. Our time is fast spent, but it has been valuable meeting with the Trade Pointe team. If you'd like to get in touch with them, they have their contact details on the screen now. Email, Aya's phone number, and Dolapo's phone number. Thank you so much to the team. This has been very enlightening.
Thank you for having us.
Yes.
Thank you. Thank you, everyone.
And
thank you very much.
And if you are still on the call, GAIA member, we have some upcoming events this week. Starting from tomorrow. Tomorrow we have the wine tasting and investment event with Johnny Medawa, who's the head of operations for Vintage Cellar. If you're a lover of wine and you're looking into investing in wines, this one is for you. We also have Gentlemen's Thursday coming up on Thursday with Hassan Jabbar, the Chief Operating Officer of MTN. And of course, May Business Garden Club is next week, Thursday, 25th of May, 2023. I encourage you, as your membership coordinator, not to miss any of these events. At least make it a point of duty to attend one of them, virtually or physically. Thank you, everyone, for joining us this evening, and I hope to see you next time.
Thank you.
Thank you.
Please do enjoy the rest of
Thank you,
the evening.
everyone.
Bye.
Thanks for the reminder, Shalom.
Thank you. Thank you. Thank you very much.